behind us. Mehraboon Irani, VP of PMS at Centrum Broking, joins us for this leg of the show. Mehraboon, surprised by inflation coming in at as high as it did today?
Definitely yes, I think, but allow me to state, Shruti, I personally feel that it's an aberration, and market possibly got one more excuse to hammer stock prices down, because as soon as these numbers came out, we saw stock prices which had recovered quite well in the mid-session, coming down again in the last 1 hour. But I personally call it an aberration. The reason is very simple, because inflation till 2 months ago, till a month ago, we were relating it to interest rates, and now with interest rates, for whatever reason, we all know that interest rates are showing signs of coming down, and quite a few banks, especially PSU banks, have already announced they've cut the lending rates, and others are going to follow, I expect. So I personally feel this inflation is not a grave concern, though, what numbers have come this week, because the fact is it's headed down, number one. And number two is this linked to interest rates. I think as with interest rates showing signs of coming down, I personally feel that this is a number which came and went, because I think it was slightly higher expectations. But I don't personally feel that this should have affected the market much. As I said, market found one more excuse to hammer stock prices down. But I still call it an aberration, because I am quite confident that in the next few weeks we may possibly see inflation coming to the single-digit levels.
Mehraboon, while that might be true of the inflation number, and that's a point of view that a lot of economists have also echoed, the fact is that while the markets did try to stage a recovery intraday, there was absolutely no support coming in from global cues. In the absence of any kind of support coming in, either from European or the rest of the Asian markets, do you think any kind of recovery is possible in our own markets?
I think, Shruti, it's one thing I need to state very clearly, that I always mention that it's very difficult to predict as far as the stock indices goes. And the way the markets went up 5 days post the Moore session, I think it surprised many of us. A 40% jump from the lows, and then a sharp fall over the last 2 days. So I think let the markets do what it wants. And I think the consensus right now, you ask anybody and everybody says that the markets will come down to test its previous lows. I don't want to disagree with that. The fact is, yes, the outlook as far as the economy goes has become rather weak, and the corporate performance may not be up to the mark, at least for the next 2 quarters. So I think what all of us were stating, a cyclical slowdown, I think corporates are admitting the fact at last. And if you look at the way production has been cut in the steel sector and the auto sector, room tariffs are coming down in the hotel sector, I think the fact is loud and clear that demand is coming down. There's a demand contraction across many sectors. The top lines of companies may suffer. So I think it's going to be a tough next 2 quarters. Even if stock prices in some cases may look attractive, the fact is the volatility which we are witnessing in the markets. I think in my last 20 years in the stock market, I have never seen this type of volatility following a bottom being formed. So that is the only reason why I don't want to disagree with the consensus that the markets may test this new low. Because the fact is that the volatility is there. So what I personally feel will happen is over the next maybe 15, 20, 30, 40, 50 days, I think the market may make an attempt to test this bottom. Then we will see a time-bound correction. The time-bound correction should definitely be accompanied by the volatility coming down, and that possibly will form the base for the next bull market.
Right, Mehraboon, talking about global cues, we'll leave you with a couple of thoughts from Hans Goetti and what he had to say on the dollar, the US, and the concerted effort made by global central banks. Back in a minute. Welcome back to Tomorrow's Bets. The big news for today, of course, was that concerted cut in the PLR by several public sector banks. Banks like State Bank of India, Bank of Baroda, Andhra Bank, Dena Bank today decided to cut their prime lending rate, or PLR, by 75 basis points. The rate cut will come into effect from Monday, which is November the 10th. Mehraboon Irani, VP of PMS at Centrum Broking, remains with us. Mehraboon, what's your own view on this PLR cut? Because a lot of analysts are fearful of the kind of pressure it will put on the NIMs of these banks.
I think this is something which we all were praying for, we all were hoping for. I remember very well that all of us were discussing with inflation going up, interest rates may not come down. Now that the interest rates have come down, possibly, I think if it's not accompanied by a cut in deposit rates, because of now no banks have hinted at, yes, it's going to cut into the margins as far as the banking sector goes. So the fact is, I think it's quite positive on the whole for Indian corporates. I think liquidity has definitely improved over the last couple of weeks. And along with the cut in interest rates, with oil price coming down, rupee showing signs of strengthening, I think all the factors which we are complaining of on the macro front, I think are showing signs of improvement. So I think the only concern as far as India goes, according to me, is the weak global cues, definitely number one. And number two is the demand contraction across sectors. I think with commodity prices, metal prices coming down, I think it could possibly help the user industries to improve their margins or to maintain their margins. But what is worrying and what is going to happen is the top line is going to take a beating. Because I think the way consumer was spending in the past, I think there is definitely a curb on that. As far as corporates go, the expansion plans of them have gone already, have got postponed, have got delayed. The orders which were there, some of them are remaining on paper, some of them are getting executed but with a delay. So I think the top lines of corporates are going to take a hit. On the macro front, allow me to state, Shruti, again repeat what I'm stating. As far as the interest rate cut goes, oil price goes, rupee showing signs of strengthening a little bit for the first time in several months, at least in the last 4-5 months. I think they're all positive measures as far as India goes. The demand contraction, the fact that quite a few industries have taken the hit and have admitted the fact that there is a tremendous slowdown, I think could make us see corporate suffering as far as the top lines goes, even if the margins show signs of steadying or maybe show some improvements also as far as the user industries goes. So I think on the whole, I would say the micro factors are a little bit more of concern right now than the macro factors as far as India is concerned, vis-a-vis what it was here about 2 months ago.
Mehraboon, you were talking about domestic demand. I wonder if you've had a time to look at the Ashok Leyland sales numbers. October sales down by as much as 50%.
Yeah, I think, Shruti, I had a look at it, and not only Ashok Leyland, but even the remarks made by Mahindra and Mahindra were quite up to the mark. If you look at them very clearly, that they are trying to take care as far as the inventory level goes. Tata Motors has announced cut in production in a way by declaring a shutdown for 3 days. So I think the writing is on the wall. But what is important and what is positive to note in all this is that the corporates also are very proactive. And I've always mentioned one thing, that in terms of price, in times of crisis, the leadership stands out. So the better corporates are already started taking measures. But the writing is on the wall that yes, there is a demand contraction. I think even if you look at the hotel sector, cut in room tariff rates. I think even if you look at the steel sector, I think ArcelorMittal announced a cut in production. So I think the companies are taking the right measures, but the fact is that it's all happening because of the demand contraction. Even if you look at the consumption from the consumers goes, I think people who wanted to buy things, whether they wanted to buy a car or whether they wanted to spend on something else, they're all putting their decisions as of now on hold, because even the job market as of now is a little bit shaky. So all this is going to take its toll. All this is going to take its effect on the top line of corporates across many sectors. But at the end of it all, it's going to end someday. So I personally feel, yes, the next 2 quarters as far as corporates go, as far as the performance of corporates go, is going to be a little bit worrying.
Mehraboon, before we let you go, very quickly, you said at the beginning of the show that the sense amongst analysts is that we might retest previous lows. What are the levels you're looking out for on both the Sensex and the Nifty?
Shruti, what I'm trying to state is that it's a consensus. If you ask anybody virtually, whether it's a technical analyst, whether it's a fundamental analyst, he will go out and say that we should come back to test the recent low. So I think 2200 is a figure which everybody is talking on the Nifty. I have never liked to make predictions, and I'm still saying that I don't like to predict what is going to happen, because nobody amongst us predicted that the markets will go up 40% in just a matter of 6 days. So I think market, even if we go back to that level, in between the market will possibly show signs of going up again, will give opportunities for traders, for smart traders. But at the end of it all, the fact is that even if it comes down to the level of 2200 again on the Nifty, I will not be surprised. The reason is very simple, is that, as I have mentioned earlier, Shruti, that the next 2 quarters are going to be very difficult. So it's basically the outlook of the Indian economy. Even if it may improve, or even if it may look much better as compared to the other emerging markets, and definitely much better than the developed markets, I personally feel for the next 4 to 6 months we could be possibly in some trouble. So during that 4 to 6 months, if we see a new low, I will not be surprised, though I would stay away from trying to predict as to what the indices would be, because I always believe that the markets ultimately will do what it wants to do, and possibly as all of us were surprised just 3 days ago, the way the markets went up by 40%, nobody had predicted, and we were all wondering whether the markets have bottomed out. The fact is that the market surprised everybody. So I have a feeling that looking at the volatility in the markets, I personally feel the bottom may not be in place. That's what I'm trying to state without trying to predict as to whether indices will go down to. So 2200, 2400, 2300 is a difficult call right now, but the fact is, looking at the volatility, possibly they may go and test the recent low.
Right, Mehraboon. Pleasure.